Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 22nd day of June 2020, and this is the daily report for gold and silver. We had a nice move in gold pricing today, taking it above the former resistance that was sitting at around 1750, and that was due to safe haven plays as the pandemic goes through a second wave globally. We'll discuss that in detail. We'll also talk about the trade that we put on and, most importantly, our upside target for where we think gold could go at the conclusion of this rally. But first, to the price board. Traders, today was certainly a pivotal day with gold futures really taking off into double-digit territories. It surged to higher grounds, really based on renewed concerns about a second wave of the pandemic, which is really triggering this rush to safe haven demand. And this is according to a report yesterday by the World Health Organization that said that the largest single-day increase in coronavirus cases, more than 180,000 new cases were reported in the last 24 hours. That's the biggest spike, and that's occurring as countries, including the United States, are attempting to reopen with some social distancing and other methods to curtail this virus from spreading. It has not been that effective, at least according to the report today. Gold is up $11.30, $1764.30. It climbed to a high today overseas of $17.79. The low that came in was $53.50. We did enter the market from the long side. We sent out a trade alert on the opening of New York this morning. People taking that call got in roughly at 1769. We have a pretty tight stop, but we'll talk about that in detail when we pull up our technical studies. We also issued that trade alert for those trading Forex at 1752.70, up $9.57. Now, platinum traded higher to the tune of about $11.80, 839.10. Palladium gained 1.7% in trading today, and it's trading at 1941.10. And then silver was the only precious metal really to lose. It might be the industrial component, but it was down about 6 cents at 17.79. And that was all with some very, very strong tailwinds of a dollar under pressure once again. Today down over 0.6% at 96.98.5. Let's take a look at our technical studies. The first chart that I do want to look at is a daily candlestick chart, this of August gold. When we look at this and compare today's close, and that's what this horizontal line is from, 64.30 comes in right in this area. In terms of carrying it over to see the highest close prior to this, we really have to go to this particular candle here, and that came in at the beginning of April. However, what is really interesting is when we convert our daily into a weekly chart. We'll do that right now, and we're going to keep that horizontal line up because what you're going to see is quite interesting. On a weekly basis, what you'll see is that the tops that came in here, that's this horizontal line, 65, has not been seen since 2012 in terms of a closing price on a weekly basis. So that is absolutely significant in terms of looking at gold from the long side. What we need to see is a continuation of the move to the upside, and most importantly, the next real area we would want to challenge would have to be 1788. The chart that we are currently looking at is also a daily chart. However, it is in Henkinashi or Japanese average format. What we can see is that trading activity today as well as Friday was the first turnaround with a green candle. However, it did have a lower wick, so it didn't really show a lot of trend strength. However, if you take a look at today's activity, it opened and never traded below the midpoint of the prior candle. That is this. Fairly large body, no lower wick. That's certainly a bullish candle. We can see that occurring in many cases. But when you get this type of candle, it is typically the beginning of a trend, and it's showing you the buildup of energy in the market. Traders, lastly, I do want to create a projection for where I think we could see gold go to over the next, say, 30 to 60 days. To do that, I'm using Elliott Wave along with a Fibonacci extension. The basic extension that I'm using starts from the conclusion of wave 2. That comes in at 1457 up until this top at 1790. That concludes the end of the third wave. We then went into the sideways trading channel, which is being labeled as a wave 4. We are now in our fifth and final wave on this chart. This is a 480-minute chart, so each candlestick represents 8 hours in trading. When I do that, and I do a simple calculation, in other words, if this next wave, wave 5, moves 0.618% of wave 3, that would take gold pricing well above 1800 to 1876. You can also see that the Elliott Wave Get system is looking at that very same price, and of course it is based upon the very same data. So effectively, we could see this market not only take out 1800, but really track closer to 1900 on this next set of rallies, if in fact we see a continuation in the market. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.